we'll let people trickle in as they go. I know it's Sunday. A lot of people are waiting to hear all this afterwards. So I'm not using my second monitor today. I'm hoping that might help some of this. I noticed that when I was recording, some of this stuff was lagging quite a bit. So I'll see if maybe letting my computer do a little bit less might make it flow a little bit better for you guys. But yes, right as you were saying, the market upcoming this week seems to be in kind of a bearish scenario, bearish, situation. And you are correct. You're very, very correct. It is in a very bearish scenario. Now, let's talk about the reasons as to why. Okay, the reasons as to why. The first thing is we do have our Fed meeting coming up next week, right? We do have that on Wednesday coming up, and we also have like GDP reports, and we also do have to worry about the fact that Europe, the European banks, just raised their interest rates by the highest in like decades at this point. So what you can think about here is just the fact that there's a lot of fear that's starting to creep back into the markets. All right. And with that also being said, we came back up from this, we rallied from this bottom right here quite a bit already. And we're in this pretty significant uptrend after breaking out of what you could imagine looked like quite a bit of a triangulation, a pennant that was forming. There was a potential for that rejection, and it kind of did for a moment, but then it did shoot back up. So now what we're dealing with here is ultimately this little flag, right? We're still in a flag formation. Now, what's interesting as well is we have this gap that we still have a little bit, tiny little bit of room that we could still fill. All right. This is the 2-hour chart that I'm giving you right now. 2 hours essentially splits up each of our days into 4 main candles, if you may, right? In this situation, 1, 2, 3, 4, right? And gives us a little bit more of an analysis as to what's going on in the day, but still big enough that we can compile some of our candles and not worry too much about fluctuations. So we do still have this gap above that hasn't been completely filled, but keep in mind, it doesn't have to today, right? It doesn't have to do it this week either. It could be later down in the line. One thing to keep in mind here too, one thing that I was also pulling up is this volume profile. And if we just took this volume of us down here, right? Let's ignore this one on the right. Just this volume down here. We do have this big block of people that I do see being a very solid bearish force, right? These people have been trapped up there. If imagine you're a buyer up here, you've been trapped up there with the market doing this down here. And so, it's been about 44 days, over a month of sorts. It's gone down another 10% from here. So what are those people doing? Likely is that once the price does come back down into this range with all these people who've bought, there's a good chance that they're going to look to push it back down first. Okay, so if we do come all the way back up past this 400 range, that's going to be a very solid resistance. So that'd be like on a bullish case right now, that would be a best case scenario for the bulls, is to see this potentially go up and retest that. But in most cases, we expect it to reject off of this because of those people above. Now, in addition as well, right, you had this giant drop down here initially. Keep that in mind, okay? So in terms of this flag that we're forming here, you can imagine all that is it's profits somewhat being taken. So let's go ahead real quick, take a quick reevaluation here from this main drop, what it looks like in terms of our fib ratios and our fib numbers, okay? So notice this here, this 0.618 from this main drop. I'll take a look there and also take a look from the breakout too, okay? From the breakout, you already have tapped the 786. From the original bottom of that channel of sorts, you're noticing here, you're at the 0.618 and you're kind of just chilling there, right? So look at this, what I'm looking at right now is this right here. This is respecting 2 fib numbers, okay? You have, let's draw a few things on here. You have this one right here, right? So this is now going to be that 0.618 resistance. That's a golden fib number, right? No, the other side would have been this one. Okay, so if we stay below this, you bet we're headed down further here. Okay, if we're able to break back above this level and hold and have a solid close above it, we could have some more push back up toward the top of this channel, right? Retest that and potentially come back up here. That'd be kind of best case scenario for the bulls. That's how I look at it. Okay, but it does also, you want to keep in mind with the Fed meeting upcoming, that's a natural bearish reaction. Interest rates are going up. Things and assets should be worth less because at the end of the day, it's harder to borrow money. And then people start to take their money out of certain investments, et cetera, because that higher interest rate makes it harder to do business in a lot of situations. So businesses struggle, all right? Another thing I said, European interest rates have gone up. We also do have an interesting push on that would potentially hurt the US dollar right now. And that's actually China and Russia have gotten together. They've been working on this for a while. There's been news about it for a while, but they've been working on their own currency that actually can be traded, against the US dollar, against oil now, if you might make, okay? And as a result, that could create a downward pressure on the dollar, okay? Causing the dollar to be worth less, but in this situation, crash the value of a lot of American stocks and American valuations. So keep that in mind. There's a lot of bearishness going into the week because of that. All right. Now, be careful. Don't just go in being bearish. What do we have to be careful about is we still have this uptrend that's really being respected. Okay, let me draw it on here instead. We still have this uptrend from the week that's still being respected. So what I'd be careful with is waiting for this to break. Once that's broken to the downside, you can wait a moment as well, wait for it to break down. So it could go up higher here. Keep in mind, it could go up higher, but if it breaks down through that line, you can wait for a retest before it goes down. Usually what ends up happening is you create this head and shoulders formation, okay? Okay, so be aware that there's still a little bit of room upward that you could go, but let's give you and take a look at some of our indicators and what potentially could be the reasons that we're headed further down. What I have here are stochastic, and this down here is our MACD, right? What are they again? Stochastic is a more mathematical RSI. Ultimately, what it does is it just involves a calculation that creates a channel that tells you, hey, are we above or below expected prices? And are we too high or too low in that channel? These recent prices pushed back down because we're getting too high, right? Now, could this still revert back high? Yep, it could still revert back higher. But as of right now as well, I want to point out this here. Okay, this is MACD. What is MACD? MACD, what you can see here is when the blue line is up here and it's above the orange line, you have this, you have a hot streak, you can imagine, okay? So here, this is all a hot streak, right? This is all a hot streak, and that creates our green impressions, all right? Those green impressions show that your averages are pulling averages up, essentially. And when it's red, it's saying your averages are pulling the longer averages down, okay? So in this situation, what you can notice is you have these peaks. It generally doesn't like to, because what this is saying is your average on, and I'll give you the numbers here for right now. The specific numbers for this MACD is 12 and 26, okay? So the last 12 hours, or last 2 hours, right? So last 24 hours, okay, versus 32 hours, okay? So the average over the 24 hours versus the average over 32 hours, so you can think of like a full day versus, a little bit more of it, you ended up with a +5, okay, +5 points, trading 5 points higher at these points, right? So right now, you're noticing that it's hit about 4, okay? a 4 moving average positive, you might imagine. Well, this last time we got to 5, we were reverted down. This last time to about 4.5-ish. And the most recent ones were actually around 3 and 2. Okay, let's go and click back upon what we see here. That corresponds right here. Okay, a lot of these to the tops. Okay, we on these situations, you might notice we revert away from these moments. And right now we're a little bit higher than previous expected numbers. Okay, so these last two as well were higher than these last two. So there's a good chance we're going to get some sort of downward pressure. And I could see it going down below 390, but 390 is going to get tested as well, right? Why is 390 getting tested? Well, if you look at these calculations, what these calculations are essentially showing us here is that you have, let me highlight here, the very middle where this big orange line behind here is, shows where the main volume of everybody is. And then you have the two boundaries out here to the yellow lines, the two yellow lines that show this is where everybody's really trading. Okay, and so we've broken right back into it. Okay, but at the end of the day, right, all of these people above, right, all of these people above, and one thing I want to point out that is kind of hidden in here, you see these right here, there's a lot of buying and trading in here, and it's still, you got to keep in mind, it's still relative. Okay, so these numbers up here, right, green and red are high, but then this was actually decent volume compared to those. All right, so you have at this point, you see how that corresponds perfectly to this area where we pushed away from, right? We bounced right off of this. Okay, meaning right here, because of that bigger volume of people. Okay, if we do break above those people, right, then you can imagine that the next big resistance does come right up here. But that's a lot for bulls to have to fight through. So what essentially should you be looking for? Well, if we don't just revert straight down, you're looking to potentially take some put positions to play off of those bounces up there, right? Because let me draw on my chart itself. I'll be using these curves. These yellow curves help us give an idea of what to predict. So the first idea is that we open up, and this last week was kind of a way, you see this white box is a way to trap people before we do head down. So you can think big money oftentimes does have this shape. You got to keep in mind, you have this flag that comes down, and what you imagine is first you get people that get way too excited about it down here. Okay, they get into it too early. These people get into it too early. They have to wait. Okay, they got to wait for this, and they might get out these additional puts, right? Then you have these people that are bulls that get trapped as well, because they're like, hey, we just broke out of this channel, we're headed back up. They get stuck up here before it reverts further down very quickly. All right, when has this happened before? Well, let's go back a little bit here and notice how, let me show you some of these situations. All right, in this situation, you have this little fake out, right? So end up expanding that before you retested to head down, right? That broke further lower. Then you have this guy, which created this, but faked it out, faked these people out, dropped, tested 1, 2, 3 times before heading up higher. Okay, so keep in mind, the markets are going to be designed to cause the most amount of pain with everybody. What I do want to point and be careful with what's going on with this upcoming week is because so many people are so bearish, that very likely and potentially could create that bigger rally. So I want you to be careful about that, right? If everybody's so bearish, then big money can push around all those bears, create some more extra pain upon them, potentially go above the gap and back up toward these upper resistances before more people and more volume can really step in to do stuff. All right, so I just want to be careful. There is a chance we just head straight down, but a rally because right now there's a saying, you know, be greedy when everybody is fearful, be fearful when everybody's greedy. Be aware that the positions that you would want to potentially take with these all come down to breaking past previous situations, okay? You don't necessarily just jump in right at open. You're looking for what? You're looking for these breaks, okay? We're looking for breaking above, right? You can say break above these previous, so we can head toward that right there, or heading up to above that, right? Good clean breaks, a good clean break would realistically be breaking above that, okay? And very likely you could break test before you head back up. Otherwise, if it breaks and it breaks back down, then you head down, okay? So where are other resistances? You have this one right here, this 396 is gonna act as resistance. And I wanna be aware as well that there is a likelihood of us forming some sort, like we might head up a little and form a head and shoulders here. So keep that in mind. If this head and shoulders forms, what you can expect is a drop and headed back down toward these previous targets that we have. Okay, there's a gap here as well down here. So with that being said for SPY, what else do I want to point out? We also have a lot of earnings coming up, okay? We're gonna go over that real quick. Here, let me pull up the daily so you can see all of it. I'm gonna go over a couple of these in a moment, all right? But just as our daily candle, I just want to give you guys. Notice this with our daily candle, we had a nice push upward. This guy had a nice push upward in green, closed near the top, gave it a little more oomph to go a little higher the next week or next day, sorry. But then what we had is we had a full reverse back down, all right? So I would say, look at this. We had dying volume in terms of the green. The bulls pushed up, but then they lost steam and the bears just came in full force up here, okay? So what would be very important to look at is on Monday, what the volume may look like if we get more selling to come versus less selling to come. That would be important to see, because if we break back into this channel, we're very likely headed further down. Otherwise, if we bounce further back up, we're going to retest these other resistances up here, okay? Let's go into the first main thing I want to talk about for this week is going to be, we've got Apple earnings and we got all the big tech earnings coming up, all right? So let's go into that. All right, I was just drawing this earlier. Apple, I had my moving averages put on here. I have it in terms of the colors of the rainbow: red, orange, yellow, green, blue. So you can see you have red, orange, yellow, green, blue, okay? So right now, these three are pulling things up, but then these two, you gotta notice, are crossing downward, okay? Blue is the longest term one, green's crossed down below it. So that means what, my 100-day moving average is now below my 200-day moving average. It's a lot of bearishness right now. This showing that we did, in a sense, right? This, you could argue, has a little bit of a head and shoulders or a was it a wedge of a sort as well. The breakout of it and the retest, you can notice we're pretty high up. But just like with SPY, we had some decent rejection at these numbers. What do I really think may potentially happen? Right now, what did happen as well is we do have that 100-day moving average now acting, we'll see. Does it act as support? If it breaks down, it'll act as resistance to head back down. Otherwise, if Apple's reporting good earnings of sorts, it'll bounce up and I would say retest this 200-day moving average, all right? But with the Fed, with a lot of what is expected to be reported, you know, our GDP, et cetera, if everything's showing that we're in recession, that we're, you know, things are getting bad for the American consumer, when does it eventually hit Apple? We got to keep that in mind. Now, I want to point out too, I was saying in, you know, look at these on the bottom. It's always green pointing up, if you notice, okay? So the green, they beat earnings pretty consistently. but that's not a reason just to buy. Okay, you got to keep in mind their earnings, you know, sometimes are great surprises, 20, 30, 40%. In this one, just a tiny little bit. But I want to point out that's not a reason to bet that it's headed up, because if you go into each of these earnings and you take a look as to what happened that day, yes, it might have popped, or the day after popped a little bit more, right? So for example, this one, okay, might have gone a little bit higher, but this essentially formed a double top that it eventually broke down from, okay? Yes, the day after it had a small pop, but actually it went down afterwards, okay? Let's continue. This other one, this one opened up higher and kept going higher, okay? That's nice. So 1 for 2, technically, right? This earnings broke down afterwards. If you notice, there's buying, but it just kind of fluctuated in here. And when you notice that, you know, if you're buying like 1 to 2 weeks out, this is just going to eat away your theta if it doesn't really, you know, what theta is just going to eat away at your contract. So this earnings had a great run up that day of earnings, and then opened up lower back down here at a moving average, this 50-day moving average, before it bounced again and went up. So notice that, like, is that they hit earnings, okay, but look at that, right? Tiny percentage and down. So they actually did poorly relative to everything else, but it took what, 2 weeks before it headed further up. Okay, let's continue. Earnings here dropped down, took how long? Took a while before it really broke out, but let's say took you 19 days, took you another month before it broke out. All right, so I just, you know, you can continue doing your analysis on this. What I just want to show you is that just because it shows green down here where you have earnings doesn't always react the same way in terms of what the stock price actually does. Now, why does that happen? Well, first off, you do have larger investors, you know, more marbles in the jar that are preparing for this kind of stuff. And as a result, they might have gotten ahead of you. They might have front run everything. So you have this thing called the earnings run up. So usually, you know, if this is earnings coming up this week, there's a lot of big money that prepared for it the week before, right? And earnings, you can also really quick down here and notice, I would just want to draw your eyes to, earnings in a lot of senses creates a large spike of volume. So keep that in mind. Now that spike of volume in Apple's case, in the big picture, did create an upward trend, but keep that in mind, that doesn't always have to continue, right? That doesn't always have to mean it will continue. Now, things to be aware of right now is that we are now trading below the 200-day moving average. So that very likely is going to at first act as resistance until we can really truly break over. What are reasons to be bearish on Apple? Are generally going to be economic and larger, bigger picture reasons. The company itself, I look at it as they're going to do everything that they can to maintain their superiority and what, you know, control they have over the market. You know, it's not like they're forcefully trying to lose customers, etc. But, you know, how the information is digested, you know, there's two things I was saying in the chats was you either want to play this earnings run up. Very few people will want to play the swing of earnings through the actual earnings call. This is going to happen on Thursday after, right? So you could play Monday, Tuesday, Wednesday for the weekly, but get rid of it by Tuesday, Wednesday if you expect a certain direction on this, right? But what I would do is on the big picture, see how it respects these larger day moving averages, okay? We are right at resistance from the previous, here, let me go back to that picture. From the previous breakdown, I want to point out too, because this actually happened with a few things. The previous Apple earnings created a nice little, kind of did this. Okay, so earnings happened, it shot up and then retested the top. So that's this right here. Earnings retested, dividends gets taken out and it shoots down. And what I want to point out was you're in this upper trading channel until that breakdown happened. And so now these people down here are going to act as your first line of resistance. You've got a lot of layers to break up above if you want to be bullish on Apple, okay? So be careful. There's going to be resistance not only at this in terms of 155 as a psychological number, 160 as a psychological number, but all of these people that are up here are now in a sense trapped up there if they are, you know, trying to get out. So be aware. Apple overall on the company itself, bullish long-term for this specific earnings. The question is when in each of these upcoming earnings does this big giant start to feel the true effects of the full economy? That's really my final question on them. But they do control a lot of different things. So keep in mind, I wouldn't necessarily play the earnings itself. It's a guess, it's a coin flip as to what direction it's going to go afterwards. It's a coin flip as well as what big money has already done to front run us, okay? What I would actually think is and say is a better situation for you to look at is look at the price action, what it's respecting, okay? Wait for earnings to be announced. Let people digest the earnings and play that Friday into the next week if you'd like to, with a better understanding of what's being reported. But what that does require you to do is have some, you know, take that Thursday of earnings and really analyze what we might expect or what we read and what we read in between the lines as to what Apple expects upcoming. But really quick, I need to point this out too before we go into the other giants though. What happened to Snapchat, guys? And I also want to point out with Snapchat is in any sort of declining sort of stock, you know, this is on the daily as well. You'll notice where these lines that I've drawn start to really become resistance levels, right? They start to bounce off of them, okay? And so once it breaks the uptrend, okay, these previous lines now suddenly become resistance lines that it now has to break through. And Snapchat continuously showed trouble doing that, okay? Now, what's this? I want to point out that the earnings from last week, okay, they reported actually, you know, not, I mean, it's still pretty terrible, but like the percentages, right? Revenue 2.31 lower than expected, or, you know, estimate. But then the earnings surprise here was, yeah, 25% lower. Okay. What were they saying? They were saying that they have a lot of competition with, you know, upcoming, you know, TikTok and other ad sources, or they're having other apps that they're having trouble with competing with now because, you know, the subscriber base and the base of, you know, students and kids and younger generation using Snap. They did, I want to say that somebody said they had a user base that increased significantly, but that the revenue was actually flat in terms of the ad revenue. I need to double check in that because there's other, I heard somewhere else that somebody said the user base was actually, you know, struggling quite a bit. So I want to double check, but ultimately what did happen with it was here, you'll notice, first off, you have this flag shape, right? And you break up above and then you just reject hard below. So you trap first down here, you trap some people that have to wait, then you trap people above that get stuck. You want to be careful with that. That's why you don't always necessarily want to buy at just the breakout. If you do, those are quick moves. If you wait for the retest, those are situations where you can actually be more certain that a stock might be headed in a direction. In this situation, you just had this breakout, earnings came out, and it just rejected, okay? So what does this mean? Well, in terms of some other things, Google is something that does rely on ad revenue as well. Now, obviously, they have a lot of other things that are a part of it, but one thing that I've heard from a lot of YouTubers from the past years talking about how the ad revenue for YouTube has actually decreased quite significantly comparing last year to this year. And so as a result, you can probably think about how, well, at the end of the day, Google, if that is already a reflection, they already had a reaction to the stock of Snapchat from last week. So keep in mind, there is already some pretty big selling that has already, you know, used that information from Snapchat to front run what they expect could potentially happen with Google. So that actually happened with Facebook too. Let me pull that up too. Facebook, because they have their hand in Snapchat as well. They, in that situation, have that drop, right? So ad revenue as a result is a situation where you know, the small people are often taking out a large amount of ads. Yes, you have big companies taking out ad revenue as well. And what you want to think about too is we have a lot of reports of layoffs from big companies. If that is happening, that just means that these big companies are also tightening up their budget. Yes, getting rid of people is one way, but I would expect that they're going to tighten up on ad revenue too. So like, are we seeing less ads from like Ford and, you know, the big companies, the big box companies? Are they still advertising on Google and with YouTube as much, or are they pulling a lot of those? And you can see here, Meta had a lot of selling here, okay? What would things that we want here? Let's just do Meta before we go back into Google. Yes, we had a nice little situation that did create a little form of accumulation, you might imagine. But here's the thing that is very worrisome, is that we had this big push up, and then we had this big push back down, and we're right back closed inside this channel. What does that mean? That means more bearishness is likely, okay? Simply because unless we come over here and we reject back up here hard, show a real sign of strength, okay? The next 3-4 days are extremely important for Meta to determine if Meta is going to be trading down here or back up there, okay? So what do we see here? Let's see, what are their expectations? 2.55, 2.8, okay. Let's compare that to last time, and then we're going to compare it to last year. Do you think they're going to still continue to make as much on earnings? And are they going to make more money than last? Okay, ooh, that might be rough, guys. Let me look here at last year. So 1, 2, 3, 4. We're going to look at this right here. Oh, sorry, didn't. But that was near the top. And what happened near the top? Let's take away that. It gapped up. Okay, so it gapped up for that one. No, actually, this one did well and it went down. Okay. Let's buying. 1, 2.
Oh, so I had a quick question.
Mm-hmm.
So I saw that like in a Discord channel, Chemo was very like bullish for a second there. Like he's gonna try to swing trade at like 170 calls, but you know, as you're showing, like there's a lot of bear sentiment. Is there a reason why like Chemo was so bullish?
Because you have to keep in mind, with earnings coming up, there's going to be people that want to get in on earnings. So there will be people buying equity. That's a natural bullish pressure. Anytime you look at earnings, you know, it doesn't always happen, but there's what we call the earnings run up, where there are people coming to the market. There's more volume. Okay. Now look at last one, volume came in, but volume came in and pushed it a little bit further down. Let's go to another one before that. I don't doubt Chemo with his, here, this is a good example too here. Look at this here. February, this earnings coming up, right? Look at the last few days before earnings right here. Okay. This is back before bad shit had happened to Meta, okay, to Facebook. But you have this thing called the earnings run up, and it isn't until most recently where we've started to have more declines before earnings in certain situations, but oftentimes they will be related to certain news, okay? The question usually you can imagine, so this one's a small little bit of a run up here, okay? You might imagine to earnings. Earnings did okay, but it dropped. You got to keep in mind. So Chemo's not looking to necessarily play earnings itself. He's playing the run up to earnings, because there's volume during that earnings situation. And he's just worrying about his support and resistance lines. There's absolutely nothing wrong with that, okay? What I would say here is, so looking at what he sees here, okay. The rough part is that we did have this big giant rejection now. Okay, so if you were to look in at this, and I were to take my fibs, we can, okay, let's go. So our fibs right now, what he said, 170. Oh, I wouldn't say that's a bad idea. Okay, so why? Look at this. On a lot of these other time frames, if you go a little bit smaller, okay, so chemo's not always going to be so focused on weekly, daily. He's going to use those to draw certain lines. Let me do that. Let me give you pretty much what chemo is looking at here. All right, what's chemo looking at? You have all these people up here. Okay, you've got all these people up here. We did have this big, you see these green candles, and what just happened, we had that rejection off of it. So we already have people that will push and sell at this point at the bottom of this. All right. However, what are the bearish scenarios? So these are this is a daily time frame. We did, if you take a look right here, we had push, push, push. Okay. Let me give you a clearer one here. So what does that mean? You've got a lot of buyers right here. You've got buyers that kind of died off, but then you got more volume coming in. So that just means buyers came in right here. You see that? You got one big push down. Look at that. That's mostly due to the fact that we came all the way up here too. Yes, we had the snap reaction. All right, now let's go into 2 hour. This is why chemo is playing it. Okay. Look here on the 2 hour situation, stochastics down here. All right. Our selling is starting to head back down. You're getting some more red, right? You're starting to break down below a little bit, but we'll see what ends up happening with that. Do we break down below previous numbers as well? Not sure yet. Let's go closer. Let's see what details we might get. Let's go into 30-minute right now. Here's why. Okay. Look at this. There's a very significant divergence that's appearing right here. And so chemo got in these areas already, right? That was on Friday. Let me show you here. Here we've got all this similar price, right? Yes, it's got a little channel that it's trading in, but here what you have is you have this starting to level off, and you have this showing a little bit of bullishness. Let me break you into this guy here. You see that now? Okay, now be careful though, because this is a little lagging too. This could continue. This would be what he's looking for. What would not be helpful is if we just bounce off and we continue breaking down, okay? But this and this is showing that wherever prices we are, it's saying people are starting to step in when the signal isn't shouting buy, buy, buy as hard, which means that ultimately there might, we might be heading further up from there is the thought, okay? Now this big red candle doesn't really make things look too great, but you do again have down here, you have people that have bought from before that will help push up for a little bit, okay? So let's go further and let's see, 5:15, let's go 15-minute. You ended off with a bunch of buying down there. So let's see, 15-minute to 30-minute, you have, I wouldn't necessarily say you have a ton of bullishness. I see something more like right now, we're gonna probably head back up to retest this area. And if anything, could break back up toward this, and best case scenario, back up to this other previous channel up here before earnings. There would have to be some reason or some big players that step in that maybe know some stuff. So if have you taken a look at the option flow just yet about this? We could do that near the end. See what meta looks like, because meta's Wednesday after. Okay, so you definitely and ooh, the hard part though. See, the hard part about meta is it's gonna coincide with the day of the Fed. Okay, yeah. Meta's gonna do something like this. And retest this is what it looks like right now. You're so far down here with this cross coming up. You've got some relief coming up. So up to 170, yes. I would say once it breaks 170, see if it does this or if it just does that. That's ultimately what determines what will happen from there. But you do have a little bit of time till earnings right now. So Meta bullish on a very short-term frame. Keep that in mind. Not very long-term at this point, but you can also expect that they're doing their best to try to do better than earnings. And if Netflix was an example of something that happened, let's take a quick look as to where Netflix ended up actually. Netflix is now higher after earnings, right? Because they reported, here's the funny part. Earnings was a surprise, but then revenue was lower than the estimate. The main thing that keeps popping up is just that, hey, they didn't lose 2 million subscribers. They only lost about 1. And as a result, it popped 20 bucks, almost 30 bucks. Okay. So, you know, be careful though, because here on the 1 hour, once it did that, it quickly sold off. You can imagine from the pop here, or you can even imagine from the run up to it, you have this large move. Okay. So I can still see it coming back down to 215 before it decides where it wants to go up further. That would very likely be where we have the profits being taken to. Hold on real quick. That would just be the earnings play. This would be the full run up to earnings. So in terms of it, yeah, it could be bouncing up, but this here, right? Let's see, daily. Okay, right. On a lot of these daily situations, you could pretty much see how they all went up very high, very quickly. And so a retest of that breakout can still happen. Be aware of that, okay? Now, this situation, Netflix already had it though. It wasn't too pretty back here. But just be aware of these breakdowns, right? 1, 2, 3, 4, 5. This here could just be an ABC retracement that we have. So with our Elliott waves, be aware that if we're getting a full move down for these, there's the 1, 2, 3, you can call this 4 or this 4, and then you have 5, right? From that 5, you can have the ABC retracement, A, B, C. So it could head further down. Otherwise, if we do show that this back here is bullish, we could start an impulse upward. Right, that's still possible. But right now, with what our indicators are showing with a lot of things, with our last week, we just had such a good big move up that look at this. Here's the things. You had this big hole down here. Notice that big hole down here, right? Which is showing that we actually don't have a lot of buyers and sellers at this value right now, right? And so we compare it to before, we're running out of buyers and sellers here. So a move out of this range is very likely, very quickly going to happen. What happened was the first move was bearish, and it was a red candle on this hour, okay? Let's go on Netflix and look at the daily. Right, rejected from that, the previous, you know, the candle right after the big drop, okay? So it's rejected that, it just tested that level. Yep, daily showing that we're running into a little bit of exhaustion with Netflix right now. So what would I expect with Netflix here? I think we're gonna go one more fib level down. Gonna go to the 210 range is my expectation right now. I test that out, and how it reacts to this right here will be our indicator of what's potentially going to move forward, okay? How it reacts to this little range right here. If we break back down into the channel, you can go more bearish on it. If you bounce off of it, headed toward up, then we could probably aim for some of these levels up here, okay? But how that reacts is very, very important. Now, in the very smaller picture here, I do want to point out there also is this move here. From the bottom here, I already see an Elliott wave. There's one possible last move up though with it. So here you have the first big moves here. 1, 2. Do you want to call 3, 4, 5 and it's done? Or is it maybe 3, you could have a flat correction, or that was 3, 4, and we have another 5. So your guess on the Elliott wave part of it is as good as mine, because I do want to point out there is still room for this to drop if it wants to. It can come back down here before it heads up. So first move due to where we're at, let's head, I'd say head back down. This is the target right here. Head back into this range before we decide where to go. Okay. Let's add on, let's see, Amazon. Amazon's really interesting to look at just because last earnings was the reason that we're actually in this lower channel. I want to point that out. Amazon is in a bear flag as well, but Amazon's near the top end of it. I had this charted from before, but okay, daily, certain things are pretty high. I want to point out last earnings here is the full reason as to why we're no longer in this upper channel. We were in this upper channel, and right here was when we broke down, and now we're down here. Okay, so I just kind of wanted to do this though. If I just copied this, I did this. That's kind of what I was thinking. So where in this box it goes to and rejects from could be here, could be higher. Okay, could be that the first candle you got to keep in mind is this guy. So he very likely is going to create the first rejection. I would not be surprised to see something up here that creates a head and shoulders where it peaks up above and then breaks down below and then starts to head down. So earnings, I feel like last earnings kind of just flipped the coin in the air really, because they were doing pretty well up through there. You know, there were a certain couple situations where the earnings boosted them and kept them up. But then that one just really wrecked it. A lot of it had to do with the valuation of Rivian. They, bought a part of Rivian, and Rivian lost a lot of value, so that caused a lot of their stock to tank too. But yeah, we'll see. Amazon overall as a company continues to grow, continues to expand. Overall, on the big picture, you could be very bullish on it, but in terms of how consumer discretionary spending is going, I would expect that Amazon might be hurting a little due to people tightening up their budgets, right? If that's the case, when they feel the full effect and it shows up on their earnings, very likely doesn't have to be this specific situation. It could be later down the line. So there's a lot of projections for our end of year and beginning of next year, those earnings to be have a lot more struggle. And so how they maybe mask it, or they say putting lipstick on a pig type of thing, that could be happening right now. They might be hiding a lot of these numbers for us right now, creating a bit of a bull trap before things reject. So I do think that with Amazon earnings run up, Amazon doesn't happen until Thursday after. I could see some buying pressure, but keep in mind, you also have the Fed meeting right before, and then earnings. How people react is a big question mark. I would more so wait for earnings to play out and then let the sentiment and the retests of whatever support and resistance levels give you an idea of what positions to take from there. So again, be careful with what you see in terms of, oh yeah, it's green and hey, it just went up, or it's red and it just went down. Number one, you can't necessarily predict how these earnings will come up unless you have your own observations, your own, personal thesis of what's going on. But I do want to point out though, keep in mind this white line I have drawn here was from before I even drew this. And that's kind of just how these things play out. You have a previous resistance that you go and you retest, and you usually bear flag around there before you break down and through. So this pattern too, I also want to pull this one up here, this pattern of Amazon, if it just fractally is doing the same thing. Here, let me move the one behind it so it doesn't get cluttered. Right. So fractally, we already have two situations where this shape already played out. We're in the middle of the third one, right? So very first one, very second one. Here's our third version of it. I mean, you tell me, right? Odds, what do our odds favor? Another hint that we also want to take a look at is the way that volume acts in these situations. Okay, so here, let me give you 1, 2, 3. So this big guy up here. What I want to point out is notice where you have the breakdown. Okay, in the breakdown right here, and what else? Okay, so look at the volume, guys. That's what I want to draw your eyes to. Volume dying down, right? And here at the lowest, here you got peaks, some volume, another peak, and then you have all this dying down. Once it completely dies down, then you break out of it. Once it breaks out, you break out of it. So what's happening now? What's happening, guys? Volume's dying down. Also, where is volume dying down? Volume dies down near the top of these channels. Okay, do you guys see what I'm talking about here? We run out of, where are the buyers and sellers running out of steam? Keep that in mind, right? So, you know, market's designed to create the most amount of pain. So what do I see? I think we're gonna go up and retest this upper channel up here, right? What we have very likely go up to this, and as high as what, 137, 140 maybe, right? Create a little extra doubt. I think that could happen before you flush down. So just be careful, be aware, right? We have a lot of bearish forces. What that could do is put so many bears against the market that it actually causes a short covering rally, right? With that short covering rally, then new shorts take it up on the top and bears take full force. Okay, so puts to calls, we do have rising, more puts coming into the market right now. Let's look at our weekly situation. And last week was actually pretty bullish. Okay, we haven't gotten down to these bottom trends, but yeah, last week was pretty bullish. We ended up bearish. Okay, so last 2 weeks we ended up bullish. So notice that there's been a lot of more bear. All right, we open up a little bullish and then close more bearish in terms of the week. Let's throw up the dollar index and I'll finish up these other big money situations. Okay. So is the dollar making a head and shoulders and coming back down? We have that question because ultimately there still is a little bit of room for it to still come down, for us to still be in an uptrend. But what's really hard to say about this is how is the market going to treat the whole new currency that is being traded, and how does the euro and all of that end up acting? The collapse of other currencies make it where the dollar is bullish, but the overall trend for it, I do believe, is once we do break down below this, we do have some pretty big ways to fall in terms of the dollar. Big thing too is the currency that Russia and China are trading and that they'll be using is actually backed by You know, gold and backed by the natural resources that they do trade. Right now, there's a lot of you know, energy issues with a lot of places, and so it very potentially could create this bigger relaxation of this back down toward $100 of sorts, and that would be good for you know, certain things like gas prices, etc. You know, we need this contraction for our prices and everything to start to fall back down, but it needs to be a domino effect with different things. Okay. What was Microsoft? Microsoft did announce they were laying off workers recently as well. They also are in the situation where, you know, they were like Amazon, where earnings pushed, or no, Apple earnings pushed it around before it broke down. So you also want to realize this is also in a lower channel. Earnings, Microsoft, I would generally say the company itself, again, does a great job with trying to you know, make more money. All right. And so Microsoft, in terms of just previous performance, I could see it going and headed back up toward previous resistance up here with a earnings run up. But how it reacts to that, we'll again have to see how it treats that resistance. Does it break into this upper channel? Because you have all these people here too, right? So the first reaction should be something like this if there's an earnings run up. Otherwise, if that earnings run up is already done, we're going to be headed back down to retest these values down here. Okay. The key thing to keep an eye out for, are we going to continue making higher lows on this? Because right now, the breakout above retest, you see this here? Or do we just continue to do this before additional decisions are made? You know, that's the hard part about earnings. More so, what's easier to do in these situations is understanding earnings and earnings weeks bring in more buyers and sellers. And so let's quickly look at what a strat situation would tell us here. The strat here is showing a very likely reversal situation. So the first thing is, if it breaks this level right here, you could go and take profit target here, profit target here, profit target down here. That makes sense? So in terms of a downward short position, if it breaks down below here, you have all the way potentially down to here to even take as previous values, okay? In terms of the upward break, what would happen is you'd break the previous candle. This previous candle would give you targets upward toward first probably these back here, which isn't great. 1, 2, 3, and then probably 4. So I'd say this is the safer bet. If you want to play up to the upper channel, keep in mind though, you have a lot of people over here selling, so be aware. And this was a big push and previous push down. Keep in mind, these sellers still stand until there's reason to break out above all of them too, okay? So this push right here gives me more weight to probably this guy right here. I think this is more likely right now. We're going to test this bottom of the channel. If you're very bearish on it, if earnings are poor too, what you're looking for is something like this, because you have to break down below these values, okay? Any questions on that? I'll take additional tickers you guys want me to go over. I'll post the rest of these into class. Anything you guys want me to look over before your week?
Did you look at Shopify?
Oh yeah, Shopify. Okay. So it really is rejecting up here pretty hard, isn't it? And who's in more force, buyers or sellers, would you say? Okay, let's take a evaluation here. Where are the bigger holes, would you say, in terms of the volume? You've got a bigger hole down here, right? Oh, let me close this. You've got a bigger hole. You got some down here, right? So what does that mean? You actually are exhausting and running out of people near the bottom in this one. Do you see that? So overall, that's more bullish, you would have to understand. Yes, we're met with a lot of selling near the top, okay? Selling, 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 okay. Let's keep that in mind. Now, next, what I wanna do is I wanna see where everybody's actually standing. So we'll take from here and we'll take a quick look, okay. What I do like is this rising volume when it comes to the buyers. You met some fierce resistance up here though. So that's really gonna be the line drawn in the sand. If we can get up above that, yes, we're headed up further, okay? Earnings generally will have a run up, but let's take a look here. Ooh, estimate. Their reports aren't looking too good, aren't they? Okay, so all I'm doing here is I'm looking at their annual last year was great. They had a great profit margin, right? But quarterly, ooh, damn. They lost a bill last year. That's not good. The reason for that. Is revenue dropping off? Ooh. Okay. So, quick, so their cash flow. Okay. That's why that's a big part of why they're struggling. Okay. This purple line that you see, right? So blue line, they've got a lot of good assets. Awesome, 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 awesome. Okay. However, right now those assets are dropping, right? Another thing is that their debt, total liabilities, oh, it went down a little from last time, but it's still over 2 bill. Their profit margin was great last year. And so that inflated them like crazy, but their profit margin's tanking right now. Last quarter, look at that. Their profit margin was a negative 122%. What the F? Like, so total assets has gone up year over year, but oh, hold on, let's go into quarterly. More receivables, other assets. What is other assets? That's 100 mil right there. Long-term investments, property, deferred tax, non-tangible. Okay, so their liabilities grew quite a bit. So here's the problem. Okay, so what actually happened, and let's make sense of all this. So pandemic hit, people had to make adjustments, big companies had to make adjustments. A lot of these tech companies started to offer offer better compensation packages for a lot of their engineers, right? They needed to fight with what the labor market was offering. And so a lot of their what they had to pay in terms of their debts and what they potentially had to pay out in terms of liabilities ended up going up. But now what's also happening is the fact that, inflation, people are necessarily, pulling back on what they need to in order to avoid, paying higher costs and, contracting what they spend. As a result, a lot of these tech companies just as well, especially with the higher interest rates and for borrowing money, now if they have these liabilities, they're on the hook for more too. So, keep that in mind. Now interest is going to take an effect upon them. And so a lot of these companies now have to deal with balancing that out. Shopify, Shopify is very big in terms of what they offer, but you want to think about consumer spending. Does the consumer spending now, especially with these smaller smaller businesses that use Shopify, is their traffic decreasing? If it is, it should start to reflect on this one and the next one, you might imagine, right? And so their last report was actually already pretty poor. That put them they're already in this lower channel. And so Shopify, man, what it shows me in terms of the chart, it's coming back down to the bottom of this channel. There may be people right here that'll push it back up. On the bigger picture, let's pull this out just as well. Let's make sure we take a look at something like the weekly. Are we potentially going through accumulation right here? Do we have enough buyers down here to support the fact that we could be pushing back up? You know what? In terms of the relative volume, you do have really good volume down below here with this one big green candle, but you still haven't necessarily shown buyers are, oh, this last candle buyers were willing to step in, but then you had this big push down from the upper part of the channel. Okay, that's good to know. You see that? So you actually have dying volume in this flag, okay? But where is the volume necessarily dying? Ooh, you got a big push. You have lower green volume. Now you have green coming back up. You actually have sellers dying out down here too, okay? So with that being said, let's pull up our, okay. Weekly, we've got a little push up to come, okay? So actually with this, with the weekly, what the weekly is telling us, we could come a little lower, but probably attacking that top end of this channel, and probably, I would say potentially having a retest of this upper top. So that's going to be what you're going to be looking for. In terms of the technicals, your stochastic is so far down here and it's starting to relieve itself, has a move up to come. However, economically, you know, with how people are going to be treating Shopify, I would give it more bearishness, okay? How on this though? Yeah. So big money indicators, there's buyers right here. There's buyers right here, and specifically down here. They purchased down here, okay? So actually, here's what I see. This shelf of people up here, I think we're gonna go up here and we're gonna test this out. And what happens after this, we either continue higher from there, or we're gonna break down and back into this channel, and it's really just gonna do and head further down from there. So say something like that. We'll probably run into these guys as resistance first. Yeah, right there. Okay, so, right, what I would do is set my alerts that if I do break up above this this $40 range, then you can take that up toward these gaps, take it up toward, you know, toward 42, possibly 44 kind of situation. All right, so let's give you your quick chart here. Your quick long position would be breaking back past up that, set your stop loss in a previous candle of sorts, and you could aim here or even up to here, right? If you're aiming for the breakdown past last candle, you're aiming for first the previous candle open and closes and lows, then I would aim for this VPR where everybody's sitting right here in terms of the downward move. And keep in mind too, it doesn't mean that we couldn't necessarily, you could have big money fake people out, go down here and then head further up before it does what I've charted up there. So again, earnings doesn't always have to make sense. You could have something like this. Okay, so Shopify is kind of rough to say, but if I were to base it upon the consumer, base it upon Shopify's revenues, going to be based upon people spending money on, you know, these websites that people are creating through Shopify. Is that going up or down? I want to say that's probably going down, but relative to previous earnings and also relative to what they estimate, that's what you got to understand is what you're really dealing with. So is it a beat in terms of what people expected and what everybody thought that the price should be with what they expected? You make the adjustment after the announcements of the real numbers, and then it's adjusted off of what was expected. Okay, keep that in mind, right? So just because they made money, just because it's green, doesn't always mean there's always a narrative or some sort of story of what's expected to happen. So my expectation for a lot of companies is a lot of them are going to say moving forward, there's going to be struggles because we're noticing certain things. One of them, I think AT&T reported last week. Let me double check. AT&T reported earnings. Let me see. Yeah, AT&T reported earnings. And look, they reported good earnings, right? Good, positive situation. Why did they drop? Well, they dropped because they actually had something that really showed the American consumer is struggling. They say they have some of the highest number of unpaid or telephone bills and bills that are actually, you know, people are holding off on paying certain bills now because they have more important things like their groceries to worry about. That was a part of the report, that even though earnings is green and it's a higher percentage, that in itself created this fear that, you know what if they can't get that money back from those people, right? What if the economy itself is actually struggling to the point of some form of collapse? That type of thought creates that, okay? And so what's going on right here? Look at this, AT&T. You have this upper shelf that you broke down from. Now here's the thing, we've fully rejected from that hard. What's my expectation for AT&T moving forward, especially with that, is we're coming back down to the lower bounds of this channel, right? We're going to test this, and then we're going to test this. And if they don't hold, we're headed further down. So you can say worst case scenario, something like this, right? All right. So notice what they're saying. Go, you know, review what it is in terms of the upcoming earnings. If there's additional ones you want me to chart, let me know. I can always pull those up. But like I said, for Shopify, be wary. Don't just jump into something. What you're looking for is breaking up or below certain places. And I will point out, this has a little bit of a look to that there could be some accumulation going on that could bring this further back up. All right. There's a lot of volume here, but that volume still, you know, what would be more so in terms of like a confirmation is after next week, if we do continue to have large amounts of volume and we trade above this lower range that we have here, then big money is likely stepped in to help out and take over, right? But you want to make sure that you don't stay in it too long, because big money could pump it up to something like here or here and also get themselves out, because that's all that they needed to do. Okay, so that's still a possibility. But for a quick, for you to, you know, profit off of it, what you're looking for at the end of the day is a move out of a channel to a target of what people have paid for previously, and you can be done with it. Right? Does that make sense? I will say though, this looks like a bear flag is what I see. You also could have an ABC correction from a 1, 2, 3, 4, 5. So I would target something like this first. What would that be? So let's say if Shopify breaks, let me give you numbers, right? Shopify breaks, this previous one would be 3670. Here, let me get the 36, look up here, 3670 36. Okay, 36.76. Once it breaks that value, what you're looking for is you can take it down to the downside. This actually has a big drop you could go for, right? You would aim for 34, 32, right? So you do have about a $3 move here that you can aim for that downward move, okay? Now with the bearishness of the Fed and let's see, when's Shopify report? It's Wednesday morning, okay? So Wednesday morning, be careful too, because if there's a run up, meaning there's going to be buyers coming in, you could see this come back up to something like this before it comes down. So this could be the entry here. If it bounces here, take the entry to head down toward these levels. Okay. So if it bounces at that 39.30, is that right? Hold on. Right. Watch what happens throughout, the first hour to a Monday, what direction it heads. Okay. So if it does bounce at any of these up here, those would be entry points for downward moves. Otherwise, if it does right away, if it breaks this white line right here, right away, and it just shows it wants to head straight down, you do have some good solid targets down here that you can aim for, right? That's a $3 move, okay? Here, let me do this for you too. I'm gonna pull up Shopify in terms of the puts, 5 days we're aiming for. Here, let me screenshot this. Okay. All right, let's do this on the daily so you guys can. So we're saying we're at 37 right now. We're aiming for down below 34 would be our, a good, great scenario here. Let's take a look at what our options look like for this. We're looking at puts, right? This would be for this week. You could aim for next week. That would be a little bit safer, but I'm just going to take a look at some numbers for this week. If I'm taking this out on Monday and I'm aiming for below that 30, 34, 35, this, if I, below 35, we have good chance of that. Yeah, that would be near that tip. So below 35, $1.50 per contract. Let me pull this over a little further. Our theta, you want to keep in mind too, our theta.
Ahí lo enrollé.
Sorry?
Sorry.
But $16, $17, this is gonna lose what, 30 cents over the weekend. So this is now at about 120. Okay, let's just put that on here. That'll be about 120. Now I want to point out though, IV right now is very, very large. You've got a very potentially big swing. Why do I also think 35 is a good, decent one? Because you have this hunt, almost 1,000 people to trade with. Shopify is not going to be as liquid as something like SPY though, so keep that in mind. You see how there's very little interest on some of these down here, but you got a lot of people here that are betting that it could go down to 35 and below. Okay, so how Shopify opens and does, you will expect it to lose a little bit due to the theta, but the delta, if it moves, and we're moving here a full $2, let's just say, all right, you're going to gain about 60 cents on that, which at this point, if it's at $1.20 and you're gaining 60 cents, that's a 50% move for what we're looking at here. Okay, so just saying, if you are looking to play this, you can keep an eye out for these 35 puts. A good entry price at this point for these would be at that 125 range, right? But be careful too, because if this does shoot up like this, these very likely could be under $1 soon, right? And just keep in mind, if you do notice any reversals of sorts, it bouncing off hard, a lot of volume selling above, then that would be a reason to get into this and playing the downside for a quick move. Now, keep in mind, this is 5 days till expiration. Oh, hold on. And so, yeah, and so that would be through the end of the week. Keep that in mind, all right? Now let's real quick, let me pull up next week's, a week extra for you guys. Let's take a look at those. What would be a good choice for those? Obviously, they're going to be a little bit more expensive. A little more expensive, but so if you take a look at that, the $35 ones, give yourself an extra week in this situation, is going to cost you a bit more, right? But your theta here is only going to cost you about 20. So this is going to be at like 1.8, 1.7 probably. Your delta here is 33. So if you can still get about $66, 66 cents per share for that same move that we're looking at. But you understand you do end up with 7 more days for this to play out. Your IV is a little bit lower, which does make it a bit safer. Now, hold on real quick. Let me do one last one. Let me give you guys August 19th would be your monthly one. In this situation, let me screenshot it. And this one means that you have probably some better open interest. So really quick, peek at the one that's still here right now. This one, the open interest on these, I want to point out, I wouldn't necessarily take next week's 35s because your open interest and there's only 300 people trading this one. Maybe the 34s would be a better choice in this one because you at least have 1,000 people to trade. Okay, do you see that? You want to be careful not to end up in a room where there's only 51 people in this entire world that are buying that. You see that? It's better if you can find 1,000. Okay. Now I will point out too, I don't love this this IV right here. These numbers are pretty ridiculous. And as as a newer trader, I would probably avoid these just for the sake of IV. You could get wrecked with IV without realizing. Now, here's a better choice. Why you'll notice sometimes chemo will go with this, right? If you notice on up here, I've got a W meaning weekly. This one's a monthly, okay? So it doesn't have that W next to it. What you can expect with monthlies is that these numbers of open interest are gonna be a little bit higher, okay? Because these are puts, you will expect the numbers out of the money to be higher because they are cheaper to purchase. Here, you'll notice your round numbers, are gonna have some bigger numbers, bigger spikes of sorts. Okay, so here, you're spending 260, your theta is only gonna lose about $12. So this is gonna go down to what, 250, let's just call that, okay? So 250 per share for these, but also your IV here is still about 100%, okay? But 4,000 people to trade with, that's a better contract to look at. This has a little bit more safety in terms of the time. You could, sometimes it'll fake you out during the week and it'll be the week after that it finally makes that move. But you want to keep in mind, what is big money necessarily saying? Is that the direction that you want to be taking? And is the IV a situation that you want to take that risk? This 100, pretty much 100% means that you have this going, right? This 250 can go left and right 100%. So it can go down to 0 and can go up to 5 is pretty much what it says, right? That's a very big swing, okay? This is its natural standard deviation. That's exactly where it's headed. So you want to be careful with IV that high, okay? Let me give you a SPY example just for the week. SPY moving into, let's just do Wednesday. I want to point out something like this has a much better IV situation for you to be, to be dealing with, okay? This is SPY right here. Look at this is for Wednesday. Yes, we don't have too much time for it, but look at my implied volatility numbers here, guys. My IV numbers are in the 20%, okay? That's going to be much more tradable for something, for someone, a newer trader, because at the end of the day, the 100% swings move so damn quick. If it goes against you, it very quickly could be a 30-40% chunk that you're losing. These are going to be a little bit more stable, but keep in mind as well, though, this is only a 2 to 3 day expiration. So theta is going to be a large portion of this, and you don't want to hold on to it too long. Okay. But at the end of the day, you do want to look where larger interest is, right? 2.5, 9,000. This is a good contract to be in because you have so many people trading. All right. And what you can also do too is take a peek at what the other side looks like. So I'm going to pull up the calls, and I'm just going to pull up the calls and take a look as to see what the call interest on that same day looks like, right? Because what you can think about here is you can kind of be your own Max Payne type of judge, right? Where are the buyers and sellers standing? So here right now, I'm going to pull in the calls. So now this is all the people that want it to go up. And with all the people that want it to go up, right? Let's see, 7,000 people sitting at 400, right? So you got 9,000 people down at this, right, on the put side, and then you got 4,000 people at the or 7,000 people at 400 on the call side. So you do have more people kind of expecting a downward move for that 390 put. Okay, so that's one way that you can kind of take a look at these. Okay, did that help you guys? Shopify, I really will point
Yes,
out,
it did.
I don't love the numbers for Shopify right now. I don't love the number of open interest for that. If you did, you really legitimately are going to be picking your contract almost based upon that. So here, if I'm going with the monthly, I have to do the 35 because there's the 4,000 on this guy. Okay, if I go with the other one, right, look at this one. Don't buy this one. Don't buy next week's, right? Okay, so not considering today would be Monday. You would either buy this Friday's, because this Friday's, remember that on this Friday's, this one had what, 1,000? But if you go to August 5th, go to next Friday, there's only 200-300 people on this one. You do not want this next week 35 put contract, okay? Don't get yourself into this, because look at this spread is going to stay larger in this situation. That's a $10 spread per contract, okay? Versus this one, right? These ones are still pretty big too, but at least there's 4,000 people to trade with. So, all right, don't forget your open interest in the situation. Anything else you guys want me to pull up? All right, if that's the case, good luck with your trades this week. If you do need any additional help, don't hesitate. Make sure you contact me and talk to me. We'll continue from there. I will post a couple more of these later, the charts and stuff later, so that everybody can see. But do your best, post what you see too. Is there a play that you're looking to get into? How are you setting yourself up? Talk to the groups and talk to ICA graduates in particular. That's where you'll be able to develop yourself the most too, by being able to go back and look upon what it is that you've previously done and what you plan to do, and accountability as well too, holding yourself accountable to those moves. All right. Okay, you guys have a great rest of your day. I will aim to do this on a weekly basis. I'm going to aim for the Wednesday night situation so we can check in for the week. And then I'm also either going to do a Friday or a Sunday one, depending on what my schedule looks like. 6:30 is going to be the usual time. If things do change, I'll let you guys know in the chat beforehand. But I look forward to seeing what you guys have done and what you guys continue to do on your trades, and we'll continue, do our best to help you guys evolve and find your edge from there. So talk to me and Chemo if you can, and we'll reconvene from there.